Yo, what's going on, everybody? It's Chase. So this week we're going to cover ES, which is the S&P 500, and we're also going to cover Bitcoin, and then we'll have a little discussion, some frequently asked questions about risk management and stuff. And I'm not going to get too deep into that. I do already have a video on risk management. You just got to look back on my page, but I definitely will chat about some of that stuff, and yeah, we'll see what we get into. You guys know how it goes. First things first. If we're going to look at ES, I'm going to mark out two levels here where I believe liquidity is pretty relevant, right? I'm zoomed out on the weekly time frame here. So why do I see this? Well, if you look at the recent trade we had on Bitcoin, sweep of liquidity, and typically you go towards the other side of liquidity, okay? So that's how I'm seeing ES at the moment. I do think that we're eventually going to work up into here. Is it asking a lot? I suppose. Could it reverse? Yes. Off of some, news or this liquidity level, I suppose so. But, if I had to give you guys my gut thoughts, here's how I see it. Let's break this down to the daily time frame now. I think that this low here gets ran eventually. So, and then we have a downtrend. We can just mark this out right here. First test of the downtrend, we could see a rejection. If we see a rejection in here, what I'm looking for a sweep of this level, okay? Upon a reclaim of this level, we can look for a long position, or you can just simply get long on the sweep, stop below here or so. It's sort of up to you, right? I get a lot of these questions about, do you enter at limit? Do you enter at market? It really depends on the situation. I think, and it really also depends on what type of risk reward I'd be getting, right? So let's take a look at this one. And also you have to consider, ES contracts and what type of stop you're able to deal with, right? Because, if ES, if you go to my everything about ES video, I talk about, normal ES contracts, micro contracts, how much they're moving, per handle, etc., etc. So just say if we were to look at it like this, okay, this is 3 risk reward. This is good, but that's a 152 point stop on ES. So that would be 152 times 50. If you were doing just one normal ES contract, or 152 times $5 if you were doing one micro contract. So you have to consider, that sometimes a position you may have to wait to get an entry because you can't just willy-nilly long this with a stop out here. That would be maybe risking 15% of your portfolio, right? But what you can do is you can wait for the sweep wherever it sweeps to, right? And when it reclaims, now you have your point of invalidation. You long the retest, and then you go for the target. Now you're most likely going to get even better risk reward, and you're going to have half the loss you would have had on a previous, on the larger stop loss, right? Okay, sip of water. So that's why when people are constantly asking me, are you entering at limit? Are you entering at market? The reality is I'm entering based off the specific setup and what it's allowing me to do. It depends on whether I'm looking for a sweep and a reclaim. It depends how, just juicy and obvious the liquidity looks, so to say. Maybe then I just use simply like a limit order, right? Like, so if you just had 3 highs, right, and you had consolidation, yeah, maybe I would just put a limit order here and a stop here, because I'm thinking, okay, we're just going to take all this liquidity real quick and nuke back down. So that is what I'm watching on ES. It's pretty simple, right? Looking for a sweep at this level. How you enter is up to you. Reclaiming this level may get a retest, may not. Once again, those are the type of things. And then we have 1 test of the trend line, 2 tests of the trend line, 3 tests of the trend line. Typically, here's a little alpha for you on trend lines, and I used to use this a lot. On the 4th test is almost always when you break, 4th or 5th test. So right here would be your 3rd test. We reject. We sweep liquidity, we reclaim. On the 4th test here, boom, and we go towards this liquidity here. So that is my trade idea, and I'm looking to utilize this level right here. Okay, that's the level I'm keeping an eye on. It could go all the way down into this demand level here. That's possible. If we just fib this leg real quick, thinking that this is the top, or if this was, our local top right here, right? And then we fib this leg. There you go. You would have this right around the equilibrium. I don't necessarily know if it's going that deep, or my gut is not telling me that it's going that deep. My gut is thinking just quick sweep, test again, and go. Okay, so that's what I'm thinking right there, and that's what I'll be looking for. Otherwise, if we do happen to break down and say flip this to resistance, and we work in here for a bit, I probably just wait and see what happens in here and see if we can reclaim this level, right? If we're able to reclaim this level and we're going for the fourth test, once again, I'm thinking we'll get a breakout. If it looked a little weak, then my target would instead move towards this liquidity instead, right? So I could target this liquidity here rather than this one if it looked like it's a weaker scenario than I expected. Okay. A lot of you guys are asking me to really get into the nitty gritty of this stuff and how to know when to take profits earlier, when to take, when to go for the full TP. And here's me trying to explain it a little bit, my expectations of the market, right? So if my expectations are not being met, I may be looking to take that profit at an earlier level. If it gives me the tiniest little sweep, and something worthwhile though that captures liquidity, right? But if it gives me a tiny sweep and it's showing no weakness whatsoever and it gets right back to the trend line and starts to break out, well then I'm thinking it could go all the way to here, right? I wouldn't be surprised if you get a rejection off of here, just the way ES is with liquidity, right? So I wouldn't be surprised if you swept, if you came up, if you got a little rejection and then you keep going. Okay, that I could see it that way as well. Once again, these are all just potential things to look for, but at the end of the day, if you just keep it simple and you say, okay, I'm looking for a sweep of liquidity, I'm looking for a reclaim, and then I'm targeting here, and that's a simple 3 risk reward trade or so. Okay, so we keep an eye on that, and then we'll move over to Bitcoin. So looking at Bitcoin, we can mark out our previous trade and just recap that real quick. So I had seen it like this. I said, okay, we had this downtrend line here, and we'd be going from liquidity to liquidity. Pretty much exactly what happened. We had this downtrend line here, and what are you having build up here, right? You're having stops build up, okay? I use the word liquidity a lot because I've explained this many times. Go to the video, liquidity in the daily time frame. Okay, so what you have here is every time price is going down, right, and people are panicking and they're shorting, and what they're doing is they're putting their stops above these highs. Okay, they're putting a stop here, they got a stop here, stop loss there, stop there, etc., etc., right? So they're putting their stops there, and then what do you get when all those stops get ran at one time? You get a squeeze, just like that. Okay, that's why I was expecting all this liquidity to be run. Okay, it's exactly the theory that I presented to you guys, and it's exactly what happened. And you understand that's exactly what happened because what triggers this big candle right here, this squeeze, this is stops. This is all the stop losses being triggered at one time. That's when you get a big squeeze in a very short amount of time. Okay, and then eventually we came up into here. This is where you get your breakout traders and whatnot, and so far we see a rejection. I did talk about a potential short position from here, although I did not personally take it because ES was really ripping and I wasn't sure whether Bitcoin was going to follow a bit. So nonetheless, I used the ES chart as, comparison or whatever you want to say, and it sort of shook me out of taking the short, but there hasn't been any real, amazing push on the short anyway. I mean, even if I took a short position, I'd be at maybe, 1R, 1.2R, and I mean, that's, it's nothing to scoff at, but again, it's not what I'm looking for in my typical 2 to 3R trade. Okay, so moving at the daily time frame here and just looking at this, I'm seeing some tight consolidation here at the moment. So tight consolidation into resistance can typically lead us higher. If we were to go higher, what we want to watch for, well, first off, we want to watch for a flip of this level, right? And we can go down to different time frames and we can say, okay, well, 4 hour, it's never closed above. 1 hour, it's never closed above. Sometimes that stuff works in crypto. Sometimes you get a deviation. Again, you're just looking for good risk reward, right? So let's go on the 4 hour. Let's say we get a flip of this level. You get a 4 hour close in here, right? And also, you can go check out the impulse moves and the infamous candle close video. Yeah, go check that one out, and that talks more about candle closes and what I look for, impulse moves through resistance, etc. So if we did push through, right, and we close above, and it's a strong impulse candle, we get a quick retest of the level and we start moving up. Where's our next target? Well, we would gather our next target from the daily time frame. We can look left, say, okay, we had this June swing low. We've talked about this in previous videos as well. Look at the support here, wicks off of it, tries to reclaim here, right? Tries to push back up. Daily closes perfectly below it. Daily rejects from it right here, okay? So this is our current high time frame resistance here, brought to us by the daily time frame. And we can see, look at the 4 hour respect as well. Resistance, resistance, resistance. Look at these closes, perfect closes, okay? So if we push above here, we look for a move right into 17.6, okay? And at that point, we'd have to go from there. A reclaim of 17.6, we need to see that on the daily time frame. We need to see a major move above, and then we can start talking about moving higher, okay? I see a lot of people talking about filling the gap, etc., but I can't even be really considering filling this until we at least get high time frame acceptance above 17.6, right? And obviously there's many ways to say this, right? People say, oh, they're looking for a close, they're looking for a clean break, they're looking for acceptance, they're looking for resistance to flip to support. What I'm trying to explain to you guys is that there is no such thing as quote-unquote confirmation. And you've been learning this, hopefully, through my videos and how I just talk about, you're looking for good risk reward, and you're looking for, levels of liquidity that look like they're going to be pushed into, where stop losses sit. Those are your main things that you're looking for. So if we get up above here, we start looking for new setups, and we can look to fill the void. But for now, we don't have anything of that nature. All we have is liquidity to liquidity, right? We swept liquidity here, and now we're currently rejecting from that level. Okay, one sec. If we move down on the 4 hour time frame here, we had the downtrend here. This was sort of our origin of impulse area right here, right? This is what sent us upwards. So we had consolidation, big move up, began the squeeze, comes down, puts in a low, really takes the liquidity here. Trying to see here. High, low, higher high. This was your higher low here before moving up again. You break local market structure here after this push. Quick break, we can see a flip to resistance, and now on the weekend we're getting just chop here, right? So we're chopping above, moving back below. I don't think that there's anything that's too relevant that's going to occur right in this tight range. What I would be watching for is, and this is how you avoid getting chopped up, right? You recognize that you're losing respect of the level, because look at during the week, right? This is Thursday, perfect respect of the market structure break, okay, rejection. This is Friday, look at these closes, again, perfect respect of the market structure break, rejection, 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 boom, hard rejection, sweep liquidity right here, okay? Now we're getting sloppy, so we don't want to trade when the market's sloppy. Let's keep that in mind. We want to look towards our key levels and what's important. I'm breaking all this low time frame stuff down, but we don't even really need it. It's helpful to understand when the market has gotten choppy, But what we want to look for is really just, interactions with this level. So like I said, potential long positions, potential short position. If we happen to come back up and just sweep this liquidity again, lose this level again, we might be seeing towards the red box, right? But if we happen to just come down, get back towards the red box, I really don't want to see it down there, to be honest. My gut feeling says we consolidate somewhere in here, and then we push above and we test this. That's my gut feeling for now. But outside of that, I really can't be seeing trades on Bitcoin outside of looking at this level and this level. Okay, I'd be looking for either a long off here, potential long off here. If we lose this, that's pretty grim in my opinion. And then we have liquidity there. We can look towards that target right there. Okay, so that's pretty much ES and Bitcoin in a nutshell at the moment. Looking at sort of more high time frame ideas. When it comes to the scalping stuff and whatnot, right now it's the weekend, so there's not really too much I can put on that front. Okay, so let's have a little discussion. Can talk about a common theme that people have been asking about. I think has been just general risk management principles and risking. I guess amount of risk and how much. I know a question I've been getting a lot is how much you can expect to make each week. Okay, first things first. I think the problem, the great thing about markets and the problem with markets is that you can pull out essentially however much money you want, but from the market, right? But what that means is that you're subject to great loss, right? If you're looking for great wins, right? Let's say you have a portfolio of $100,000. Well, you could risk that whole portfolio on one trade, and you could come out a millionaire, or you could lose everything you've worked for in the past couple years, right? So, what you need to do first off is you need to understand, how much you should be risking and what you feel comfortable with. Okay. So, I like to, go for a run or take a walk, and I think about, okay, well, and this is me, a little whiles back before I sort of had my system in place, but I would go for a walk and I would think, okay, let's see, $2,000 per trade. How do I feel when I lose $2,000? Okay, I can handle it. I don't feel like my mental state is like ruined. All right, how do I feel when I lose $10,000? No, I don't want to lose $10,000 in a day. That doesn't feel good. Okay, so have that conversation with yourself, and you're gonna get to that number, to where you're like, that number might be $50. That number might be 5,000. It might be 20,000. I don't know. Maybe I got some whales following me, but it's not about the amount. It's about what feels comfortable to you, okay? Relative to your net worth, your portfolio, whatever you're judging your risk factors on and whatnot. But I think that's a really important conversation to have with yourself, because you can't take these trades, and you won't be able to know. Again, when I was talking about whether to be looking for a limit setup or a market setup, or a limit, a limit entry below the level versus waiting for a reclaim of the level. You're going to have different stop amounts and whatnot, and that type of stuff is going to come into play, because you're going to look and you're going to say, oh, this stop is way past what I can afford to risk. Okay, well, I'm going to have to wait for a reclaim on this one and see how it plays out, right? And try to find something on the lower time frame to find an entry. Excuse me, my throat's a little shoddy today. So that's the biggest thing, right? Is that you can view the market as something that can give you, tremendous gain, but it can also take at any time it wants from you. So we need to find something, between 0.5% to 2.5%. That's what I deem as reasonable, whether you're doing swing trading or scalping. 0.5% to 3%, I guess. I try to keep my swings between 1% and 2%. I try to keep my scalps between sometimes 1/4%, sometimes 0.5%. And I know, people, you'll hear on crypto, people are, always talking about all this crazy leverage and shit. Oh, I'm on 50x. Guys, they just want to show a big green number on the screen. They want to see the big 960% or whatever it says, but they're making fucking $150. All right, so don't be, don't compare yourself to the person next to you, because half the time they're lying anyway, or they're bullshitting. It's just it's cross leverage or whatever you want to say. Compare it to yourself and work on what feels comfortable to you. Because if your risk if you're not comfortable with your risk, you're gonna fail. Okay, and you're not gonna let trades go to target. You're not gonna let them hit the stop if it needs to, if it's invalidated. You're gonna see it go a little bit red, and you're gonna be like, oh my god, I'm already down $700, and I don't want to be down 4,000. I gotta cut it right now. No, that's terrible. Just make the whole trade from your entry to stop something that you're comfortable with. If that number's 500, then that's fine, because you're gonna look at that trade, then you're gonna be like, oh, okay, well, worst case scenario, I only lose $500. I'm okay with that. And that's how you're gonna become a better trader, by letting your trades play out and really get the feel for it. And you're not gonna be emotional about it. And you're going to be able to look at it objectively. You're not going to be going down to the 1 minute, seeing if the 1 minute support is holding or some stupid shit like that. It's just not necessary. I told you guys on the BTC trade, on this BTC trade, I said that it may take days to fill, and it did. I think it took like 2 or 3 days to play out in total. And I knew that was going to happen. And I know that there's some people probably sitting there, and they're thinking, oh, this could be going bad. This could be not doing well. And they're panicking, and they're closing early. They're giving up gains. It's ridiculous. Just pick a risk amount that's comfortable and stick with it. Okay? Outside of that, one other thing I wanted to talk about. I have a lot of people, every time I do a trade, it's always, what's next? What's next? First off, guys, look, if just because I won, one trade, very publicly last week, doesn't mean, that I'm some trading genius, okay? So I don't want anybody coming in and throwing fucking 5 times their normal risk on the next idea I post, right? It's stupid, right? Every time I take a trade, the risk is very similar. Nothing is an anomaly with me. So if you really want to follow me and follow how I work, then that means that you're always sticking with a comfortable risk, and if you get stopped out, it don't mean shit to you that day. You're fine with it. You're going to recalibrate. You're going to look for the next plan. You're going to look for the next trade. If you're trying to use my trades or something to, make it big or something, please don't. Not good, because eventually, there will be a loser. There will be times I'm out of sync. And I don't want to see people be taking, a big loss just because, oh yeah, Chase, he got his last 5 trades right. This time I'm buying myself a car with his trade, and then you lose 10K or something crazy, right? All right, so none of that shit. And just in general, guys, I post content when I have it, right? It's better to post quality analysis, in my opinion, and analysis that actually is relevant, than just posting a chart every day with a lot of lines, and it gives you no substance, right? You just okay, well, and then later on I'll say, oh yeah, well, I got it right off of this one. I try to develop a real thought process and narrative before I put something out. I don't just mark up the chart and say, okay, well, if it comes here, you hope for the best. If it comes here, you hope for the best. And then I go on Twitter, a day later and say, oh, yeah, well, I caught that long, and then I caught short off that one. Anyone can mark out some levels, but to try to think through, what's currently happening in the market, and try to give a story to it, and really, think about where stops are and how they may, get taken, move to another level. That's what I'm trying to do. So if you're always asking what's next, please just give me some time. I'm gonna put out I'm always going to put out new analysis for as long as I'm doing this. It's just I don't want to put out garbage analysis. Okay. As always, if you enjoy my content, please. I did put a link tree in my Twitter profile. It has a lot of like my most commonly, well-received videos. It's all free stuff in there, right? So if you're looking to learn more about liquidity, about ES, all that stuff is in there. Also, I also have some refs in there. You guys know these videos are sponsored by Prime. Check them out. A sign up and deposit to there. That really, keeps these videos coming. They're the ones who sponsor these streams or videos, so to say. Okay, as always, like and retweet the tweet, thumbs up, everything. All that is very appreciated. Appreciate you guys, and I will see you next week. Peace out.